Dipan Mehta, director at Elixir Equities, is joining us now to give us his view, almost 40% actually in the last 12 months. Dipan, your thoughts here. There is clearly a revival in the capex cycle, and now you're seeing orders pour in thick and fast, not just from the government's end in the domestic market, but now on the export front as well. Is it too late to jump onto this bandwagon?
Good morning, Sonia, and thank you for having me on your show. I think if L&T gets an order like this, then certainly it's not too late. And the thing about L&T is that, they have been focusing a lot on return on capital employed, and that certainly has improved the valuation ratios, a lot of value being created in the subsidies as well. But on the whole, I think we were a little cautious on the market. But at corrections, I think capital goods still remains a very sustainable investment theme. And many companies over there are sitting on 2, 3, 5-year type of order book position. And that does give very good visibility, and valuations are still reasonable. And what I like best is that eventually all of the operating profit margins for these companies also will start to inch up because of operating leverages or because of higher margin orders and completion of legacy orders. So I think next 2-3 years, the earnings growth will be fantastic. I would say 25% thereabout for a whole host of companies engaged in capital goods supply or services, or even EPC projects for that matter.
Okay, well, there is L&T. Dipan, hi, good morning. Prashant here. So many sell-side reports on this entire EMS space. I think CLSA has got a note out this morning, I think. Jefferies had a initiating coverage note out 2 days back. Ambit has put out this morning something on the space again, saying, well, they're moving away from assembly to more value-added efforts across the board. Dixon and Amber and Keynes and Sirma and PG Electroplast. Stocks have all, the runway for growth may be pretty long, but prices are also pretty high here. So what's the bet to make if you wanted exposure? If you don't have exposure and if you wanted to get in, is this the right time, or one should just wait for some dips whenever that happens?
Good morning, Prashant. See, the thing about these EMS companies is that they keep on surprising on the upside. You see, there have been minor setbacks for Dixon, but the numbers last quarter were pretty decent. And these are great secular stories. If you hold them for even 1 or 2 years or so and price goes lower, suddenly you find them at very attractive levels. And then from that point also, these companies can generate 15-20% type of bottom line growth. So if you have a 5-year, 7-year, 10-year view on these companies, then even from these levels, you will see them compounding really well and delivering above average returns. But that, I think, considering the valuation at which they are trading at, yes, I think some sort of a correction can be expected in them. A bad quarter will lead to unusually higher correction in the stock price because a lot of expectations have got built in. Also keep in mind that floating stock is very low. The likes of Dixon or Amber, they are favorites with a lot of portfolio managers and small mid-cap funds as well. And part of the reason why they are trading at such rich multiples that whenever fresh money comes into these investment vehicles, they are buying the same stocks, which include these two companies per se. So just because they're expensive, I don't want to sell. But I think that at correction, one could look at entering into these companies, but you have to have a longer term view, 3 to 5 years or so, because that's where I think the maximum returns will come back-ended, in my opinion.
Get back to our conversation with Dipan Mehta. Dipan, hi, good morning. One brokerage note that caught my eye today was CLSA getting all bullish on this EMS space, electronics manufacturing services. And I was wondering whether they're coming in on this a little too late. But anyway, CLSA's thought is that this is a multi-year story. Want to get your views. I guess it's a question of valuations as well, right? Because some of these small little stocks, Keynes and Sirma, etc., some of them are trading at 50, 60, 70 times already. So how would you view this?
Morning, Surbi. You're right. They got both of it right, that they are entering a bit late into this space by giving out a recommendation. And these are, in fact, multi-year secular growth stories. And, typically when such an investment theme plays out, you don't know what the outcome can be. Because, we are working with present facts, but the environment is so ripe and there are so many opportunities and so many players, internal as well as MNCs looking to manufacture into India. So the opportunities, I think, are not completely visible or perhaps captured in the stock price. We are looking at their trailing 12-month earnings per share and just compounding it by 25%. and then extrapolating what it will be for the next 2-3 years or so. But I think these earnings can surprise on the upside. But till then, I think the stocks will run up significantly along with a lot of mid-cap stocks. And I would like to buy them at a correction. Maybe 15-20% correction can happen any point of time. A bad quarter also can lead to a correction. So buy and decline is my outlook for all these EMS stocks.
You know, Dipan, just one quick one. Yesterday, actually, in the broader market, it was very peculiar because what went up was a mix of smaller sectors. So I'll tell you, sugar stocks went up. Right? I counted some 10, 13, 14 sugar stocks which were up. Big gains, by the way. And we'll put some of them up. Renuka, Dhampur, Dalmia, Ugar, Mavana. Second day running, by the way. Sugar has been moving up. You had fertilizer names which moved up. Again, smaller sector, right? RCF, Madras Fertilizer, FACT. And these are not areas where only one stock moves up. It's usually a sectoral move. Third sector, paper. Again, it's a sectoral mover, not a single stock mover. JK Paper, West Coast, Andhra, Tamil Nadu Paper, Orient Paper, you name it. Was all the rage yesterday. Rice stocks moved up. Dawat, KRBL. So these are, and by the way, this is the bulk of the broader market move. The big volume-led movers in these are from these 3-4 spaces. Apart from, Sirma, Avalon, the EMS stuff that we were discussing earlier. Anything in the space that you like? And I just want you to comment particularly on sugar. Is the excitement justified? Because global prices are rising, sugar prices, but it's very unlikely that retail prices will be allowed to kind of, rise significantly here. Manisha yesterday was telling us that local prices are at about a 35% discount to global prices. Go on.
See, Prashant, the common thread across all the sectors you named is that they are low PE stocks. And in markets like this, I think value investors are migrating to these counters where there's still comfort as far as, valuations are concerned. Specifically sugar, I think they did well because sugar crop may be lower and therefore prices may be higher, and companies sitting on stock from last season may benefit from that. But nonetheless, these sugar companies are deriving more and more revenues from ethanol, which is quite profitable. 30-40% revenues coming from ethanol for many of these sugar companies, and that's rising at 25% thereabout because of the government mandate to blend it with petrol. So I think prospects are great for sugar companies. The return ratios are also pretty decent, and all of them are expanding capacity, especially on the ethanol side. So very positive on sugar companies. I would say that any of these companies, Balrampur Chini, all of these companies, I think, could offer an outperformance, and they're available at reasonable valuations. You could include Dhampur Sugar. All of them are doing pretty well at this point of time.
Okay, thanks a lot, Dipan, for joining in. Appreciate your time. We're heading